Hello, Internet. My name is Matt, and this video is going to be a kind of frequently asked questions review and an overview of the risks of putting some of your money into Anchor Protocol, and also just the Terra ecosystem in general. I kind of thought of this channel more as just doing how-to guides, but enough people have asked me to kind of cover some of these other questions that I figured it was worth doing. And I'm going to start with my standard disclaimer that nothing that I say on this channel or any videos I do is financial advice. I'm not a financial advisor. Everything is just for your personal edification only. Okay, so let's get started. First, we're going to cover Terra real quick. So why is the Terra ecosystem cool? So one of the biggest things about Terra is that it's built to integrate stable coins, or specifically UST, it's USD native stablecoin, throughout every level. So, most people know about crypto, know something about Bitcoin and Ether, and those are, very cool, and they have their pluses and minuses, but honestly, they're much more like gold or silver and are less like currencies because the value of them just changes a lot. So, like if you had a small business and you were wanting to accept crypto for services or goods or something like that, and you get paid in Bitcoin, let's say, but then the price of Bitcoin drops by 20% because of something that Elon Musk tweets or something like that. That's kind of not a very good way to do transactions, right? Stable coins, which are tied to usually the dollar, but you could have stable coins that are tied to other things. And actually the Terra ecosystem is talking about doing like a euro pegged stable coin as well. Those have much higher utility because people get paid in, if you're in the US, in dollars, and they want to spend in dollars. So it just makes sense. Now, UST in particular is a very nice stablecoin. There are a lot of stablecoins out there now. There's obviously some of the original ones like USDT, which is also called Tether. And then USDC is another big one, and DAI. And each of those has got some pluses and minuses to it. But the biggest difference between those and UST is that UST is fully decentralized. So with each of those, you have to kind of trust some sort of company or organization to sort of verify that the price of one USDT or one USDC is going to equal $1. And especially with USDT Tether, like there's been a lot of questions about the company behind Tether and whether they are above board or not. If you're interested in that, you can just go ahead and Google Tether or USDT, and there are plenty of articles talking about kind of how sketchy the company that runs USDT is. So the Terra ecosystem, unlike Ether or many other blockchains, has UST built into it from like the ground level. So you pay most fees, or you can pay all fees for transactions in UST. And it's the one of the two native currencies in the ecosystem. Additionally, the Terra ecosystem is proven to be very stable, just from like a technology standpoint. For example, like another big alternative blockchain that people are kind of excited about is Solana. But Solana has had a lot of outages where the whole blockchain will just go down for like 4 or 8 hours. So it's just hasn't proven to be that stable or consistent or reliable. Additionally, the guys that developed the Terra system put a lot of energy into making it like easier to use, just sort of work well, have better design, and so people have been calling it the Apple of blockchains for that reason. Now, obviously, I'm doing how-to videos, so it's not that easy. There still are ins and outs, of course, and things like fiat on-ramps and just, a lot of terminology you need to learn. But compared to a lot of other stuff in the crypto space, it's actually like very easy and just seems to work very well. So that's why Terra is cool, and why kind of I think putting your funds into Terra, or maybe not yours, putting my funds into Terra, I think is a reasonable thing. And I'm not like worried that the Terra ecosystem is just going to go belly up like tomorrow or something. So now let's talk about Anchor. So, well, what exactly is Anchor Protocol? Like most people, especially who are getting started, just know it as essentially a savings account that pays ridiculously high rates. But really what it is actually lending and borrowing. So it's a crypto money market. Now, most people don't really know the term money market except for in reference to a money market like savings account that you can open with a bank. This is not the same thing as that. So a money market is in the real world is basically something that's only available to banks or financial institutions where they can lend or borrow from each other, and maybe also very large companies too. But in general, in the crypto space, a crypto money market is a place where you can use one type of cryptocurrency as collateral for a loan in another type of currency. So in the case of Anchor, it's really focused heavily on the two native coins of the Terra ecosystem. So you can put up Luna and borrow UST against it. And that way you don't have to sell your Luna. So what is the point of that? Well, if you're really bullish on Luna, then you can keep holding your Luna and speculate that it's going to go up in value. But then you can also access the value that's stored in that Luna and use that UST to earn more yield or to do something else with. Additionally, there's also tax purposes here. So if you're in the U.S., then the U.S. tax code says that if you hold something, if the value of it goes up, as long as you don't sell it, you don't have to pay taxes on the increase in value. It's capital gains, right? You only pay capital gains tax when you make a sale. So you can borrow against something and get access to the value stored in it without needing to sell it and therefore have a taxable event. So a lot of people might be bullish on Luna, want to hold Luna long term, but then want to be able to actually take some of that quote unquote earnings, the increase in price, and use it to buy a car or whatever, do something else with. And so you can take a loan against your Luna and it doesn't create a taxable event. Although I do have to say taxes in relation to crypto is rapidly evolving and very complicated, and nobody really knows exactly what's like true or not with the tax situation with crypto. So it's a little bit of an unknown at this moment. If you are extremely tax risk averse, then maybe just stay out of crypto entirely. Additionally, if you want to learn more about Anchor, I really do highly recommend the Anchor Protocol docs. So it's docs.anchorprotocol.com. They go into much more detail and talk about how the whole lending and borrowing works. This idea of bonded assets or B assets. So that's you put up your Luna, or they take now ETH. You put up your Luna or your ETH and turn it into B Luna or B ETH, and then you can borrow against it, borrowing UST. So it can kind of explain how this all works. So let's talk now about the risks of using the Anchor protocol. And I'm just talking purely about using it as for the savings account function, where you just put UST in and earn interest. So let's start out from the broadest risk down to the most specific. So there's an existential risk, essentially, which is that the government just decides to outlaw all of crypto. And not just the U.S. government, but maybe many governments do. At this point, this seems very unlikely. Certainly there are governments around the world that have outlawed all crypto and are going to. Probably there are more that are going to. But it seems very unlikely that the U.S. government will do it. So if you're in the U.S., which my videos are mostly targeted at people in the U.S. because that's kind of what I know, it seems very unlikely. And probably also, most European countries, Canada, most of the developed nations are probably not going to outlaw all of crypto. There certainly might be more regulations that come down. In fact, there almost guaranteed will be more regulations that come down. But if you just, in my opinion, the biggest sort of convincing argument for why crypto is around to stay is that many senators and congressmen have disclosed that they own crypto in their portfolios. So it seems rather unlikely that they're going to outlaw something that they themselves are partaking in. Next, we're moving to the ecosystem risk. So this is specifically for Terra. So Terra, like I said, the UST token is fundamental to the operations of Terra. And there is a risk that there's an algorithmic mechanism which keeps UST equaling $1 or extremely close to $1. And there's a risk that mechanism could break down and the peg, the UST to USD peg, fails. That could happen. It's not out of the realm of possible, but there have been a couple incidents where there's been a lot of stress been put on the price of UST. and UST is rapidly, maybe it's gone down in price for a short period of time, but it's rapidly recovered. So it seems like, and each time as well, the people that run the Terra ecosystem, were able to learn from a stress test essentially, and they've made changes to how the improvements, added some more guardrails and stuff to how the peg holds. And so it seems to me like the chance the UST depegs completely is fairly unlikely. It certainly could fluctuate a little bit, and in an extreme, on an extreme day, where some huge news comes out that causes the price of all cryptocurrencies to plummet. You could see UST trading at 95 cents for a while. But again, short of something like the US outlawing all crypto, I don't think UST is actually going to completely depeg. That is also just my opinion. So if you want to learn more about this, there's plenty of good articles for Googling. Additionally, as well, if you're a non-US resident, then there's the foreign exchange risk. So if you get paid in euros and you're putting your money into an Anchor account as essentially a savings account, then you're converting it to dollars. And if the euro to dollar exchange rate changes, then you face some risk there. But that said, that could also be a big benefit. For example, if I lived in one of these countries that has hyperinflation going on, like Venezuela, I would absolutely be very happy to have my savings stored in US dollars or in a US pegged stablecoin. So that could be a big benefit too. Then moving down from the Terra ecosystem, we have the platform risk. So Anchor itself is a protocol, which is a series of smart contracts that are stored on the Terra ecosystem or on the Terra blockchain. And there's a chance that those smart contracts could get hacked, essentially. So that there's some sort of bug that allows someone to siphon off funds from these smart contracts where the tokens are actually stored. So when you deposit your UST into Anchor, you're actually sending that UST from your wallet to a smart contract that holds it, and that smart contract obviously is sending you back the AUST. And there's a chance that something could happen with the smart contract where there's some sort of bug or vulnerability where a hacker could figure out how to drain the UST that's stored in it. That seems pretty unlikely at this point. I mean, there's billions of dollars in Anchor. If we go look at Anchor Home right now, the total value locked is almost $11 billion. And 5.7 billion of that is just the UST. And then the other 5.25 billion is in collateral, so in bonded Luna and bonded ETH. So there's been a huge incentive for a while now for hackers to figure out, how to drain money from these smart contracts, and they haven't been able to do it. So, that's not a guarantee that there's not a bug that could be found at a later point. But in general, they've been audited by several different auditing companies. There's already been a huge incentive. No hackers have figured it out yet. It's a good sign so far. And then the other thing that I think gives me confidence in putting my funds into Anchor is that there's a $1 million bug bounty. So if you are a more ethical hacker and you're looking over the code of Anchor and you figure out a vulnerability, then you can report it and you can get $1 million UST in return for reporting a high security level bug. So that's, much, in my opinion, if I were a hacker, I would just take $1 million and not risk the chance of getting caught by governments or law enforcement or anything for stealing, because $1 million is still pretty nice, right? And you probably also would get a lot of job offers and stuff as soon as you did it, because you'd publicly be known as the person who figured out the bug in Anchor protocol, which is a big deal. So then moving down from there, we have a yield risk. And to me, these risks seem, in my opinion, pretty manageable. I don't think any of them is super likely to happen. But the yield risk to me is one that feels much more not just possible, but almost guaranteed. So this is the case that the interest rate goes down. I think the interest rate will go down. I don't think it will hold 19.5% forever. In fact, I don't think it'll hold 19.5% for, maybe a couple more years, and that'd be it. Now, I do think it will go down gradually. So I think you might see 15% for a while or something in that range. And then eventually, maybe several years from now, settling in more at around 10%, which 10% is still pretty darn nice. Compared again to your standard U.S. bank savings account, which is paying you 0.1%, I would love to earn 10% or even 5% interest. So the question to me is like, when is this going to happen? There's actually some talk right now that they should, there's, people who think they should lower the interest rate now and try and build up a bigger reserve fund to keep a 15% rate for a longer period of time. There's other people that think they should hold the 19.5 or almost everyone calls it 20% because you round up, but it's actually 19.5%. They should hold that as long as they possibly can and then drop it down to something like 10 or 12. In my opinion, I'd be happy with either of those options. If we could earn 20% for another year and then it drops to 12, that would be fine. That's fine with me. If we could earn 15% for 2 or 3 years, if it lowers to 15% in 3 or 4 months or something, and then we could earn 15% for 3 or 4 years, that's also totally fine with me. They have a lot of people who are looking at this who are running calculations about the yield they're earning and how long they can maintain that for. They have a yield reserve, so if they're not earning enough to cover what they're paying out each day, then they can draw down the yield reserve. And if they're earning more, then they can build it up. So I trust that they're doing these calculations and figuring out what kind of runway they have, and will take steps to protect that runway. And actually, I'll talk about a little bit more about this in just a second, but I want to finish out the risks. So finally, the last risk is the individual risk, which is that, I don't want to call people stupid, but there are people who do stupid things, and I'm sure most of them do it accidentally, but you can send your funds to the wrong place. You can mess up your wallet. You can, hand out, people fall victim to spam emails still, to this day. People are buying Viagra off of spam emails or sending money to Nigerian princes or whatever. So obviously people do stuff that is highly not recommended. And there is that risk that if you get caught somehow and you give access to your wallet, let's say, someone will just take that money from you. And that is a risk. And that does not happen with banks. If you put your money in a savings account in a bank that's FDIC insured, and, if bank robbers come in and rob that bank, they don't take your money because the federal government will just replenish whatever is lost as long as you have no more than, I think it's $250,000 in a single account per person. So that is not the case with your crypto wallet. That is not the case with the money you have in Anchor Protocol. You can end up messing it up. And that's, this is actually pretty much the reason why I started this channel and started making videos, is because I want people to have an easy to follow guide where they can just follow along, watch the video, pause the video, do the step themselves, then play the video again, then pause it again. And that way it should eliminate at least the vast majority of these kinds of things. So now a few final questions. So how do you get your money out is another common one. So if you deposit your money here, like I have in the Earn, I only have $5 showing here because I took the AUST and did some other stuff with it. But if I want to get this money out, I can withdraw it here. Then it turns back to my wallet as UST. So it would show up here as UST. Then I can send it from here back to OKCoin and then withdraw it, sell it for USD in OKCoin, and then withdraw it to my bank account. So basically doing the exact reverse process of what I did to get it in. And again, I made a long video that shows exactly how to get money in from a bank account through OKCoin, through Terra Station wallet into Anchor. So for the time being, if you want to get money out, you can just reverse that video. You could watch that video, write down the steps, and go in reverse. I probably at some point will actually do a demonstration of literally going the opposite direction. So that's how you get money out. The next question, if the Anchor protocol is so great and you can earn such high interest rates, then why aren't other bigger players starting to use it? And the answer is, well, it's fairly new. Crypto in general is new. There is regulation risk for companies, I think, more than individuals. That if you are, a big corporation and you start playing around with crypto, that you could potentially face like SEC type, investigations or whatever. But that said, MasterCard just announced that they're going to be issuing a debit card through a partnership with this, other company that will allow you to use UST at merchants, and the merchants receive US dollars. So you could go and buy gas with a MasterCard that is drawing down your UST balance, and the gas station just receives regular US dollars. So that's pretty cool, and that's supposed to be coming in 2022. So bigger players are starting to integrate with it. And then finally, what about taxes? The cool thing about Anchor is that you're not getting paid interest, like actual interest into your wallet, right? So when I deposit money into Anchor here, like I have in my demo account, I have a deposit value, but what I've actually received is like I sent my UST to them and I got this AUST back. My analogy before, that this is like your coat check ticket. So you can take this AUST and turn it back into Anchor and get your UST back out. What this means is that the amount of AUST is not growing. You're not actually getting paid anything into your own wallet. It's just that the exchange rate between AUST and UST is changing. And it changes currently at 19.5% interest per year. You can track it up here. This is the current exchange rate. So over time, this number here will tick up just slowly. And what that means is that by getting quote unquote paid this 19.5% interest, you're not actually getting paid anything until you withdraw your UST. And what that means is that there's no taxable event. Again, this is for the US, and I want to say also, I'm not a tax professional. This is not tax advice. You'd have to talk to your accountant, your tax professional, whoever, to verify this is all true. But this is my understanding, is that as long as you just hold this AUST, you have no taxable event. You have nothing to be taxed on. And it would only be once you convert your AUST back to UST that you would have to pay any sort of taxes on it, on your gains. Now, obviously, crypto and the IRS and the whole tax situation is liable to change. I don't think the taxable event thing is going to change. That's been true of capital gains for a long, long time. Like if you bought a piece of land and you just held the land for 30 years, you have to pay property taxes. But in terms of the value of the land going up over time, maybe you spent $10,000 on an acre of just trees somewhere, and then 30 years later, that acre is worth $300,000, you're not getting taxed by the IRS on that quote unquote gain until you sell it, until you actually have US dollars that you got in exchange for your land. And so I don't think that provision of the tax code is going to change anytime soon. But again, I'm not a tax professional. You can verify that all with your accountant or tax professional. So I believe that is everything, at least everything I wanted to cover in this. This is not, completely comprehensive, but I think I've answered quite a few good questions, given a good overview. If you have more questions or you want clarifications, please feel free to comment. I do read the comments. I do try and respond to them. And if there's some good questions, I might make a follow-up video to this. So yeah, hopefully this has been helpful and you've found it edifying.